Good morning.
So good morning, everybody. Happy to have everyone on this Friday morning. Had a little rain last night, so should be beautiful. So April showers, hopefully we'll bring some May flowers. And so I'm Danny Fitzgerald. I'm the Executive Director of the San Diego and Imperial Small Business Development Center Network. Of course, we are a resource partner of the U.S. Small Business Administration. We are also funded by the state of California through the California Office of the Small Business Advocate. That means, of course, we're here for you, the business owner and entrepreneur, as you start your business, as you grow your business. And one of the main things we do is help people access capital. So we know it is a complicated market. It can be confusing, but there are so many great lenders out there that we want to have these regular panels to introduce the lenders and what they do and a variety of different types of things. So but before we get going, I want to do a couple of quick updates. I know we're pretty, we're wound down pretty much, hopefully, fingers crossed, on the pandemic and everything. And certainly what we do know is programs are pretty much wound down. There's some cleanup, there's different types of things like that. So I'm going to kind of do a little bit of an update, and then I'm going to pass it to my counterpart there at the U.S. Small Business Administration, Ms. Luci. But first, just wanted to so for state and local programs that are out there, of course, they're pretty well wrapped up. The here within the county of San Diego in particular, their funding have pretty much wound down. There will be one small round left of the county micro business grants, but those are the smallest of the small. So you had to have been in business in 2019 and earn less than $50,000 in revenue and be in San Diego County. The County of Imperial will open that similar program probably sometime in May. And that's about it that's new that's going to come out. There still is some wrap up from a few things. I think the main things is if you applied, for example, for the California Relief Grant, but maybe you didn't complete your application, you went to heck with this, it was a technology pain or anything like this, but you've got recently an email from Lendistry saying, hey, if you complete your application, there may be some funding. Reach out to us at the SBDC. We can help you make sure that gets completed. And if you are eligible to be able to get 5 to 25,000, probably more likely 5 or 15. But other than that, things are pretty much wrapped up. And so it's pretty well wound down. I think it's more just kind of the cleanup, such as PPP forgiveness, anything still cleaning up with EIDL. And for that, I'm going to turn it over to Luci Montgomery from the Small Business Administration. Luci. And it looks like Luci froze. Well, as Luci comes back, so hopefully, there she is. There she is. Now she's unfrozen. Go for it, Luci.
Great. I'll make it really quick. Thank you for being here on behalf of the SBA.
What kind is yours?
The SBA would like you to know that there still is a chance to get some increase of your EIDL loan, though this is a very short increase. If you already have an EIDL loan, you need to go in your portal right away. The EIDL funds are going to be expiring and expended in a matter of weeks. So do this. If you have outstanding documents, turn it in as soon as possible. If you need help with PPP forgiveness and you aren't getting a response from your bank, please contact us at the local office. You may have heard of SBA from the COVID disaster, but we want you to know that the SBA has actually been around for some time, and we do offer guaranteed loans. However, they're through our member banks, which is why this particular seminar is extremely important for you to pivot your business from COVID, from getting over the disaster into other SBA programs. We just want to remind you that SBA is not just for disasters. But we don't direct lend these regular general business programs, which is why you need these lender partners to help you with the SBA guaranteed loans, from microloans, export loans, general business loans, which we call 7A, or 504 loans, which are for commercial real estate and machinery. We recommend that you get with your SBDC mentor and get some help with your documents. And I'm glad you're attending this seminar, which a lot of you, we have recommended this seminar for capital access to help you pivot and get into some of these SBA or even non-SBA funding to get you capital.
Oh, she froze again. See, so we appreciate Luci if she comes back. There she is. Now she's back.
We're reach out to our office if you need help, and we'll happily assist you. Thank you.
All right, and Luci's going to put her office's information, the San Diego District Office. I cannot say enough about them. Luci, Jamie, Mike, Cynthia, all led by Ruben, really were instrumental in our market for helping folks navigate everything that went on throughout the pandemic. It's amazing what that small team was able to do, and I truly cannot commend them enough. They are fantastic partners and really appreciate all that they do. So with that, we will move into our panel, and we will be able to kind of go through it. We have a fantastic panel of lenders here today to kind of be able to introduce themselves, kind of some of the stuff that they are able to do. And so let's go ahead and start. Why don't we go ahead and start with you, Pete, if you could introduce yourself and the institution you work with.
Oh, yes. Hi, Keith Geck with Pinnacle Brand Group. We're a local footwear supplier based here in San Diego.
No. Pete Tirado from Banner Bank.
I'm sorry.
All right, no worries. There's a couple of Pete's on there. That was my mistake.
I thought you said Keith too, so then
That's fine.
Okay,
That's
well,
my bad. Apparently it's apparently that happened. So Pete Tirado from Banner.
Okay. Well, again, yeah, my name's Peter Tirado. I'm from Banner Bank. I'm the branch manager here at the Carlsbad branch. Banner Bank's been around for over 100 years. We're actually headquartered up in the Northwest. So it's probably one of the #1 branches up in the Northwest. We've expanded out here in California. We have 8 branches here in San Diego. In regards to, lending programs, I mean, we can help businesses with anything from startup capital, working capital, if you're looking to, maybe add some staff or cover some, maybe bridge some AR timing differences, equipment financing, commercial real estate, pretty much anything that, a business can need, whether it's short-term, long-term, we can assist them with that. A little thing about myself, I've been in banking for about 20 years, and as far as Banner, why I choose Banner, just, we kind of do the old school model of banking where, we value having the one-on-one relationship with our clients. So, that's, I guess, really how we differentiate ourselves, is we kind of focus on building a real relationship as opposed to just a transaction, getting it done and never talking to you again. So Peter Tirado, Banner Bank.
Thanks, Pete. Appreciate that. And Andrew. You're on mute still, Andrew. There we go.
Trying to click it up. Good morning, everyone. My name is Andrew Crone. I'm Senior VP of Marble Bridge Funding Group, as noted in the background. We are a 24-year-old commercial finance company located in the Bay Area, serving all of California. And we work with businesses that provide products or services to other businesses or government entities, and they invoice those clients. So essentially, we are a receivable finance company helping with cash flow. We work with startups or companies that are up to 50 million in revenue, though most of the companies we see are about 500,000 to 20 million in revenue. We have no minimums, and we can turn around and bring a client in less than 2 weeks. And so we move very quickly, and we have a lot of expertise. I've been here 21 years. I know a lot of the lenders. I know most of the banks. Real service for you, help you out, and anything I can do to help you. But we're also a direct lender, and we can help your business grow if you have the growth capacity to grow.
Fantastic. Thanks, Andrew. Janelle.
Hi. Just making sure I'm not on mute. Hi, I'm Janelle Shalou. I'm a business relationship manager here at Chase Bank. Chase Bank is, the largest bank in the country. We've got we're in over 48 states. But our main goal is to make sure that our clients are taken care of. We're all about relationship banking, making sure that you have someone to work with. As far as lending, we are a traditional lender. So we do have a small box of what we can do. But what we do really well. We do lines of credit, we do term loans, we do real estate loans, commercial loans. So we do everything that a business needs. So, even though we are a big bank, we want to cater to our small businesses.
Fantastic. And Miriam.
So I work at CDC Small Business Finance, and that does not stand for Center of Disease Control. It stands for Certified Development Company, which is a little bit about what our SBA person was talking about. So we do SBA loans. We are a nonprofit lender. We've been around for 40 plus years. And we've had a relationship, I think, for 40 plus years with SBDC for a very long time. But yeah, our focus is on helping those that are not quite yet ready for, Janelle or Banner Bank or the rest of the people that might be on this group, traditional lending. So our loans actually typically go up to 250,000. But starting next month sometime, we don't know exactly when, we're going to be going up to 350, which is super exciting. But we help startup business owners, existing owners, anybody that wants to purchase a business that either is a franchise or non-franchise, just a small business. And your credit score only needs to be a 620. And then our terms are usually for 10 years. So some of our rates are fixed and some are not. They're from 6 to 8%. And I think that pretty much covers what we do. We all know each other here pretty well. So yep, if I can't help you, I'll probably for sure refer you to the SBDC or someone else here.
Awesome. Thanks, Miriam. And last but not least, Joyce from Accessity.
Good morning, everybody. My name is Joyce Parra from Accessity. Accessity has been around since 1994. We serve the Imperial, Los Angeles, Orange County, Riverside, San Bernardino, and San Diego counties. We really expanded since less than 10 years ago. Our primary focus is to bring access to capital, people that haven't had, can't able to get their loans through regular venues like Miriam to the banks. So we're here to help you out. Our loans are really micro loans. I mean, we start from $300 to $100,000. And we like to help our clients get their company started. We help make sure they have the right foundation for them to be able to grow and go to the banks. We get a lot of our leads through all the people right here, through the banks, even Miriam, because some of the loans are smaller than, that we help. We're not SBA lending. We have a simple interest, and our interest rate go from 7.99 to 14.99. And for businesses that got started back in before 2019, we're still part of the California Relief Fund, which means if you need funds that you were affected by the pandemic, come see us, see if I can help you out. The interest rate is 4.25 and closing fees are $250, so they're fabulous. Thank you so much.
Awesome. Thank you, Joyce. So I wanted to get into a couple of other different types of questions and maybe a little bit deeper in terms of the lending process with your organization. You each touched on it a little bit, but I think really kind of, starting with when you start working with a business to the point where they actually are funded. If you could kind of walk through what that particularly looks like. And why don't we go ahead and start with you, Miriam? Miriam?
Can you hear
There
me?
we go. Yep, now we can.
Sorry about that. Yes.
Mute
So
button.
whenever a client is referred to me, I'm not a fan of anybody honestly applying online because your credit gets pulled. So, and you may not be a fit for what we have to offer. And as I mentioned, we all network together. If clients come to you first, you guys know exactly which one of us here on the panelists is a good fit for them. So when a client gets referred to me, I definitely have a conversation, 15, 20-minute conversation to see if we're able to help. And what we're looking for is just for our client to know what their credit score is, know what they want to use the money that they need for their business and how much money they need. And then once that process is kind of figured out and they're a good fit for us, then I go ahead and send them an application, let them know in 3 to 4 days if they pre-qualify. And then if they do, they go into our underwriting. So we actually have a lot of processes that go through, other than my 20 years of experience in management and just eyes that look at our pre-qualifications. So when our clients get pre-qualified, I would say 90% of them get approved. So we are kind of tight on the front end, but that, gives us a lot of approvals that people can get through me, which is really good for the client. And our loans go up to 250,000. The funding process itself once they go to the underwriter, that can take a month or two, depending on what they need the money for. It can be as quick as 3 weeks as well. So that's a little bit of what the process looks like when a client comes to me, but I'm really just, like I said, looking to see if we can help. And if not, place them with somebody else that can.
Fantastic. And what about you, Pete? What's the kind of the process there at Banner Bank from kind of, starting to work with the business to them getting funded?
Yeah, so it's a similar deal. So typically, if I have a client that's referred to me, the first thing I want to do is I want to as well sit down and have a conversation with them. Now, I think it's important for the business to understand, like, what do they need the funds for? Because it's one thing to just go to an underwriter and just ask for money. It's another thing to be able to present a case and help them understand the justification for the borrowing cause. So having a plan, understanding where you are in your business, whether it's a startup, where are you guys going? Where do you guys project yourself? If it's, a business that's already going, I would want to probably look at, obviously before submitting, I would want to just look at basic things like, your personal financial statement, maybe some tax returns, just to be able to kind of get an idea of your performance. Because when it comes to underwriting, we probably want to see at least about a 640 credit score. When it comes to underwriting, they really want to see, like, how are we getting repaid? Whether that's the operating profits of the business, if there's any risks that we need to mitigate, that could be somewhere where we need to add either a collateral, or we do offer, we can do like an SBA Express, which guarantees like 50% of the loan. So that's really what I would do is before we even submit, I would want to be able to get an understanding of where you're at, what are your strengths, what are your weaknesses, because it's my job to put together a credit write-up to the underwriter to paint the picture, so they're not just going based off of numbers, but they understand, the experience, the performance, and again, any risk mitigants. As far as accessing funds, I mean, we usually get a decision within 2 to 3 business days. Depending if it's a business line that requires any type of additional collateral, you can maybe add another week or so. So it could be anywhere from 3 days to 2 weeks.
Fantastic. Thanks, Pete. And Joyce, what's the process there at Accessity?
Hey there, it's pretty similar to everybody else. I like to speak to the clients before they do apply, because I do notice people that just apply usually don't get approved. So I like to talk to them first. I want to see where they are at the moment, see if because we do a lot of startups, we do require business plan and projections, and sometimes a balance sheet, all dependent on the stage of the startup. And I want to see where they are, see if they're ready. And I speak to a lot of people that I send back to you guys, to the SBDC and the New Wounders Business Center, to help them with their business plan and projections, because I want to make sure my clients have the right foundation and they're ready to apply. Our loan process usually takes between 1 or 2 weeks, sometimes 3 weeks. It depends on the client, how fast they are getting all the documentation to us. So we try to be pretty quickly about it. I mean, it depends how much they're in need and how much they're knowledgeable about their finance. I like for them to see their own credit before they apply to us, because we're seeing a lot of lower credit scores. So I like for them to take a look. And if they're having some credit challenges also, before they apply, I like to send them to another organization we work closely with, Trust Plus, and sometimes I can help them clear things they've had in their credit score from the past years. So I like to really work with my clients, hold their hands each way to the step, and make sure they're ready to apply before we pull credit, because I don't want to hurt them in the future. Thank you.
Absolutely. What about you, Andrew?
Yeah, our process begins with myself. Been with Marble Bridge 21 years. I handle the underwriting, and typically among all the lenders here and most out of the marketplace, we have the easiest underwriting standards. So past bankruptcies, if there are judgments, tax liens, those are all things we can look at and do. I've done credit scores as low as 420 in my career. But the key part that we're looking at is where the business is and where it's headed. So we've had a rough couple of years here for businesses, and a lot of them now have survived thanks to the efforts of the SBA and the EIDL loans, and PPP loans, and now they're growing. And so I'm dealing with a lot of those that have past history, but we're looking where they are headed in 2022 and the rebound that's taken place. So a call with me, within that one call, I could usually figure out whether we can do the deal or not. And if we do the deal and go forward and gather all the documents and do all the double checks, we're probably close to about 98% approval. So if we get in the door with me in the first call, then we are going to do the deal. We will gather a full package, much like a bank. We ask for financials, tax returns, but we don't need to see CPA audited financials. We can work with the numbers you have. I have enough expertise that I can look at your numbers, see if they're right, they're wrong, makes recommendations to help you look stronger, and basically play more than just a lender. A little bit of free counseling as well is what I bring to the table. And that's why I've worked with SBDCs from the very beginning that I've been here 21 years. We all work as a team, and we're going to try to do everything possible to strengthen your business. So it's more than just a lending relationship. We want you, if you come on board with us, to succeed. And unlike, some of the lenders here, or most of the lenders that have some kind of credit limit, I could fund up to $5 million a month for any client I bring in. So if you can grow the business, we can get you the funding on receivable, purchase order, contract finance combined. So that's a little preview of how we do it.
Fantastic. Thanks, Andrew. And Janelle, how do you do things?
I'd like to say that, obviously everyone on the panel has a lot of experience. And if you're working with a banker, you do want someone that will take the time, to really understand your business. And that's what, I do as well. I talk with you. I find out where you came from. How did the business start? What are you doing today? What are your plans for tomorrow? What do you want the money for? How much do you need? How did you get to that number? I'll also ask you, if there's anything that I should be aware of. Obviously, my role is to paint a picture or tell a story to the underwriter, because they're just looking at hard numbers. So I need to be able to go through and say, okay, if there was a one-time expense, you need to make me aware of it. If there's a bankruptcy, any credit issues, anything that you feel is relevant, you need to be completely honest with me, because I want to be able to get this done for you. And really, like everyone said, is paint the picture for the underwriter, talk to them, mitigate any external factors that might lead to a decline, and get you to the finish line with the money that you need to grow your business.
Fantastic. No, I mean, so it's good to kind of see what the process is, and they're all similar, and between the different types of lenders. And I think, again, it's important to recognize that we have different types of lenders out here. We have, of course, Pete and Janelle that are with traditional banks and lending institutions, Joyce and Miriam that are with nonprofit lenders or community development financial institutions, and Andrew that is with an alternative lender, for lack of a better term, that takes things from a different approach. And you can kind of see it, but still in the end, they all work kind of similar. So next question I kind of want to ask, you talked a little bit about some of the process and things like this. And this is actually a question I like quite a bit, because it's so very true. What is something a business should not do when they're coming to get funded? So something they should not do. And that's something that always is kind of important, because it kind of, those pitfalls to think about. So Andrew, we'll start with you.
I would say that when you're talking to me or any of the other lenders, to be totally frank and honest about everything. Don't hold anything back. We all do background checks. We all do different things to verify who our clients are, what's going on in their lives, what's happening in the business. We are going to end up running credit. So anything that's out there will show up. So the key part about that when you're dealing with a lender is to make sure that you are telling them everything, the good, the bad, anything that happened in the past, because we will discover it. That being said, on my end, I can easily tell you whether that becomes an issue or not. And again, because of the easy qualifying at my end, if the business is growing, You're headed in the right direction. You have potential to grow very quickly. Even if you're a startup and you know you got a lot of orders, we can react very quickly and get you there. But the big thing is be honest up front, because if you start the process and we start going through all the background and everything, we're going to find it. And when I said I approved 98% of the deals, the 2% that don't get through are because I found stuff they didn't tell me about.
Fantastic. And Miriam, what's one of those pitfalls you would say to avoid?
Avoid not being prepared. So I agree with Andrew, definitely be honest, because if Andrew can't help you or I can't help you, probably someone on this panel can, or we know someone. But in addition to that, be prepared. So I think some of us have already kind of discussed that questions that we ask, in our initial conversation with you. So definitely know what your credit score is. You can go to creditkarma.com. It doesn't affect the actual score that we pull, but it will, it's free and it'll give you an idea of what your credit score is. So definitely have an idea of what your credit score is. If you come to me, I'll give you an example of what not to do. So you come to me and I ask you, how much money do you want? And you say, what is your max? And I say 350. And you say, give me your max. And I say, okay, what are you going to use the money for? And you say, well, I might hire some new employees. I don't know, but I need it. Don't do that. So do the opposite of that. Be prepared. Know your credit score, know how much money you want, know what you need the money for. And it's great to go to SBDC. I send out so many people to you guys, not just startups, but actual existing business owners, to help them, set some projections up and understand exactly how much money they need and what they need it for. I think some of us have all discussed how we help you get approved as a small business owner. And we really do need to know the story, and we really do need to know exactly what you need the money for. So don't do the opposite of that. Be prepared.
Fantastic. Thanks, Miriam. What about you, Janelle? What are some pitfalls?
I would say, along with what everyone else has said, the one thing that I would suggest is don't wait too long. I run into business clients all the time that they started running through their cash, and then it's time for them to apply for a loan. So I think you need to really understand your business, be able to look ahead and see if you're going to have a shortfall with your ARs. Maybe before that happens, come to the bank, start talking to people about how you're going to get through that period without running through your cash. Most lenders will ask for either an injection or want to see reserves in cash. So that would be my advice: is be aware of your business, see, look forward and see, any potential downfalls and plan for it and do it in advance before you actually need the loan. Then it's very difficult to get the loan.
Fantastic. And Joyce, what are some pitfalls?
My God, that was great. I was going to say that. Make sure you come to see a banker or a lender before you need the money. Like yesterday, we get a lot of people that have used their credit cards. Don't use your credit card to subsidize your business. That's a key thing. Don't commingle. I mean, I see a lot of that. Make sure you have everything separate. Go see a banker. Open your bank account with, with Banner Bank or with Chase. Make sure you have everything separated, because I do see that a lot. The other thing is I've had 2 loans this month being denied, and for this specific reason. They were getting another loan while they were getting our loan. And that's not, we are going to check at the end. So make sure if you're going to come see a lender, go through the whole process with them, because at the end of the lending process, once we're going to release the funds, we do pull credit one more time. It is a soft credit. It's not going to hurt you, but we are going to take a look, see where you are at the moment before we let the funds out. So don't get another loan in between, coming to any of us. You're most likely is going to get denied, like it happened to 2 of my loans. Thank you.
Fantastic. And Pete?
Yeah, those are a lot of good ones already. I would say this on top of what has been said already. I think especially for startup businesses, I've seen it for everyone. Don't go applying everywhere. I've seen plenty of times where people are like, I just need to get credit, so I'm gonna apply here, I'm gonna apply here, I'm gonna apply here, I'm gonna apply here. It's like every place you're going, they're all pulling your credit. So I would say, just bringing it back to what everyone else is saying, like get a plan, talk to a lender, do your due diligence, and at that point, stick it out with the one person. If it needs to be referred elsewhere after that point, you can cross that bridge when you get there, but don't go running your credit a million times. Bring that back a little bit.
No, that's fantastic. And I think these are all good things to think about, because I actually wanted to focus on the pitfalls, because that's sometimes something that people don't necessarily think about. And it's good to know what to avoid and learn from mistakes in the past and stuff like that. So wanted to shift gear back a little bit again. Certainly, this has been a crazy few years. Now, as we come out of COVID, now we have a new thing. We have inflationary pressures. The interest rates are certainly being impacted and stuff like that. And so for 2022, as things are in flux with interest rate changes post-pandemic, what are some of the things that your institution, you are kind of seeing going forward for 2022 and even into maybe the next year? So yeah, this is the crystal ball question. So wanted to kind of see what you're thinking. Why don't we go ahead and start with you, Janelle?
I think, everything is in a lot of flux right now. I mean, I know that the economy is booming. I think with the increase in interest rates, the fears of inflation, there's possible talk of, future recession down the road. I think it still looks good for businesses. I see a lot of my businesses are still performing well. People are still buying things, using services. But what I am suggesting to my clients is get prepared. Now is the time to start thinking of, potential, line of credit. If you're going to make a purchase, get everything ready. Make sure you have enough cash, because if there is, a downturn or a recession, you're prepared.
Very good. And Joyce, what are some of the things your crystal ball saying?
Well, we're seeing a large number of applications coming through us, more than before the pandemic. So I think a lot of people are starting, there's a huge entrepreneurial spirit here in this country or in this region. We see a lot of applications, a lot of people wanting to start their businesses. So that's what we're seeing. So we're trying to get ready here at Accessity to make sure we're able to service them.
And Pete, what are you seeing there at Banner?
I kind of said a bit of a mix of both of those. So definitely, you hear the talks of recession, all that, but there's obviously opportunity in that as well. But we definitely want to be able to prepare our business clients for that. But I think since, businesses are opening up again, we've seen a huge influx of applications for just businesses that want to, get back out there. They want to, their demand's coming back. They can travel again. I mean, I have a client right now that, they most of their business was done through the DOD, and they had all these travel restrictions, so they couldn't do business. And now that they're open, they're like, man, I got all this business. I need money. I need to, hire employees. So, we've definitely seen a huge amount of applications coming in, especially with, interest rates starting to move up. You got commercial clients that are wanting to come in and refinance, lock in their rates, before things begin to move up. So I've definitely seen a lot of clients coming in to get access to capital.
Fantastic, Pete. And Andrew, what's your crystal ball saying?
I would say that we definitely turned a corner with COVID, which is sort of fading in the background, at least for the moment. We don't know what the future is going to be for COVID, whether it's a fall thing or not. So there's going to be some of that unknown out there for all of us, I guess, that we're just going to sort of try to live with it, hopefully. On the business side, we are back in a big way. I am underwriting every single week now. So we've seen a major uptick in applications. And really among the clients we've seen, probably the majority of clients that I've seen or spoken to, they've all have PPP. Most of them have had it forgiven already. And now they are getting their EIDL or still have their EIDL or they're getting their EIDL. I've helped 3 or 4 businesses in the last week working with SBDCs and contacts I have to try to get that idle out the door. Several of them are waiting for millions of dollars. We've been successful with some of them I've referred in to speed up the process. So as we talked about in the beginning, if you have an idle loan, if you haven't got one or you think you can get one, go for it now. Call the SBDC and get it. This may be a last call on this area. So businesses the businesses we're seeing, these are the ones who survived. So they got through it. They didn't become millionaires with PPP and idle, though we did see some get very, very strong and need no bank financing. They went the other way. They got so much money, and that's great for them. But there's a percentage that have survived, and now they're trying to get more money, and they're finding it a little bit difficult from the traditional lending side. And they're coming into our door, and we are swamped at that end. I would say, crystal ball wise, you are going to see interest rates rise. I don't know for how long. They're going to push on the string to see how far they can get on it. And you definitely are going to see inflation. And it's going to get, I think, hotter, not calmer going into the next year. So there's going to be challenges for labor and materials. And so every business I look at today on the underwriting, I want to know how they're going to be affected by higher prices and what their strategy is. If you can't grow in this environment, you're going to have some issues as a small business. And you may want to speak to the SBDC about strategies for growth, because if you don't grow and you have inflation at 8, 10, 15%, you're actually going to be down as far as the revenue you're going to earn going in the future. So businesses today have to be growing to survive this environment. And so that's what we're seeing a little bit.
Fantastic. And Miriam, you've got a little bit to shine up your crystal ball. So what have you got?
Well, just in general, we know that it is predicted that prime will continue to increase. I don't know how many times, 2 more, 3 more times here. So yes, I mean, that is always a sign that the economy is getting better. And so as far as in CDC, we have heard as of last Monday that the goal is for our underwriting to get back to where it was before the pandemic. So that's really, really good news. And then in addition, SBA has decided to increase the amount of the Community Advantage loan, the 7A SBA loan that we do. And so that's going to be, like I said, coming up here soon, up to $350. So if you ask me, the horizon looks good. I mean, we are more flexible, and so that's a good thing. We can help more small business owners.
Fantastic. All right, want to shift gear back to something kind of more fun. I want, to talk about a recent success story that you've had. So we've had some great information on some pitfalls, kind of some forecasting, understanding the process that each of these lenders do. But I want, just to kind of hear of, and feel free to anonymize it as much as you want. But a recent case of a business you helped that got funded, and something that you have. I know that's kind of our why we're in small business and in assistance and all that. So why don't we go ahead and start with you, Joyce?
I am so sorry. What was the question?
Success case.
Success case. I have this amazing story. I have a client that purchased another business, a tire business here in San Diego. And he worked there for 3 years, and he recently got his green card because, and we were able to give him a small loan, but we were able to help him purchase this tire store here in San Diego. And he's been able to grow the business like 3-folds from the previous owner. So I'm really proud of my client. I was so excited. He worked so hard previously as a worker, and then he purchased a business, and now he's been able to make it 3-fold, which I'm so proud of that guy. And I was glad to be part of the process, helping him out, filled out the paperwork, fill out his business plan, his projections, all that from the get-go. It took us quite a bit. It took us over 6 months, but we were, to get the loan, but finally, since he's been able to be owner of the company, like he's grown so much, it's just amazing.
That's fantastic. What about you, Pete?
Got a couple, but I think the one that really stands out for me is a lady. She's basically just a sole proprietor real estate investor, you know, and a lot of times, especially in traditional lending, those might not necessarily be the most desirable type of funding. But, you know, for her, you know, she was needing, you know, funds to be able to upgrade her homes. They were a bit worn down, and, you know, she wanted to make sure that she can keep up with rental. So on paper, you know, her taxes and everything, they didn't look fantastic, but this really goes back to, like, I think what a lot of us were saying earlier, is really making sure that you can talk to an experienced lender that understands how to look at your situation. Because, you know, originally this loan got declined, but we were able to turn it around, you know, get her a $200,000 line to be able to help her, you know, do the improvements on her homes, which she's just finishing up now. This was some months back. But for me, it was great because, you know, she was bouncing from place to place trying to get lending, and just no one wanted to help her based on the fact that, you know, they didn't know how to be creative with their income. And, you know, we were able to get it across the finish line. So I was super happy about that, and it's opened up a whole new, you know, avenue for some of her family. And, you know, her daughter has a startup business that she's brought over, and we've been able to do some financing for her as well. So I was really excited about that she didn't have to, you know, jump somewhere else and try to, you know, run her credit again. We were able to take care of it. So I was happy about that.
Fantastic. That's so fun to do. I mean, that's really, it's kind of our why of what we do. What about you, Janelle?
I have a recent client that, you know, as I said earlier, you don't want to wait too long. You want to be able to forecast out. My client had a large contract they signed the end of last year with a huge company. Very excited about that. They are, the way that the contract is structured, he's going to have a shortfall between when he actually gets the money from the vendor that he's doing business with and the vendors he has to pay. So he has a 2-month time period where he has no cash available. So he came almost too late, but fortunately was able to get to us, explain the situation. We're able to look at, you know, his accounts receivables, his business, everything. And we were able to determine that we were able to help him, you know, cover that shortfall. So we were able to get an SBA guarantee, work with him, you know, and so because of that, you know, it's going to be an ongoing contract. So we're able to stop the pain for those 2 months where he had no cash to pay vendors, give him the money, and then he's going to extend the contract for the next year or two. So, you know, it's a win, and we were able to, you know, really work with, and again, I was able to tell the story to the underwriter, really, you know, work through the issues that he was facing. And like I said, we were able to get him a loan that does stop some of the pain of not being able to pay his vendors. So it was a great story.
Fantastic. No, again, great story. And Miriam, you always have some fun ones.
Yeah, so I have a recent client I was able to help that invented something super cool for, I think it's called a green screen for TikTok. I feel so old. It takes me a while to remember that, but it's very popular because it's foldable and it's tiny, and then when it pops up, it's huge behind you, and so you can take your green screen with you. And so it's a pretty cool invention, and he did a Kickstarter for it, and he got a ton of interest, and basically ran out of funds in order to completely produce what he needed to produce his product. And so he came to us, and he was like, you know, I invented this software, and I invented this product, and now I have a ton of orders and I need help. And he has like 20 years of experience in the industry, in the software industry, and in what he was doing. And I know he said he went to a couple of large lender and even a small lender, and they were not able to help him. And he's like, Miriam, help me. My credit is getting pulled everywhere and no one's helping me. And I have orders. And so thankfully we were able to help him. He's actually located in Los Angeles, and we would give him $160,000 to fulfill his, to be able to get the inventory to fulfill the demand. So it's a pretty cool story. Yeah. It reminds me why I do what I do.
Awesome. No, absolutely. Our why. And Andrew, I know your passion always comes through with these.
So I got a couple, but one of the latest ones we just signed are 3 gentlemen that have 3 separate businesses come together to form a new business. And it's what we call staffing model. They're going to be providing construction staffing to the military in the San Diego market. There's like a lot of industries, there's not enough people to fill the jobs. They know how to get the people, they have experience. One of the gentlemen is a disabled vet, so that gives them the in to work with some large prime contractors. And they're working right now placing their first group of people. And we would expect the first invoices billing within probably another week or so. They are projecting to go from startup to 9 million this year. And we will be able to fund all their payroll, because their payroll, they could bill weekly. And so the first week the people work, the second week payroll is due, and they will hand us the invoices for the first week, and we will fund that. And we will fund that every week. And every week they'll be adding more and more bodies to the various jobs that they got. And if everything works out right, they're going to hit 9 million this year. And these guys are going to make, I don't know, probably at least $1 million to the bottom line, if not 2 million. And they'll be done with us. And then within a year after that, they'll be going for traditional bank financing. But we're going to help them launch to get from point A to point B. So that's a pretty good success story. There are a lot of people in their, I would say, my generation that are retiring right now. So there are a lot of businesses for sale. And so one way to buy them is using SBA products and work with a bank. But if you start a new corporation, that generally doesn't work. We have a client that I just recently brought on board that bought a $6 million business, all with investment money. He didn't have to put one dime in. And we know he knows the business well because we've dealt with him in the past in other companies. He is now covering and putting in food in all the Whole Foods and a lot of the other supermarkets on a weekly, daily basis, which produces hundreds of invoices a week. And he's landed several clients to distribute even more food into. And so this company is growing quite rapidly, already at a 30% growth rate. And he needs cash because he's got to pay the vendors for food. And as you would imagine, food is going up, gas is going up because he's delivering the food. And so I asked that question, which I brought up earlier to our audience here. And he's allowed to raise the prices every week if he has to. So that means you and I are going to be paying more for sandwiches and burritos and salads that are prepared, which we're already seeing. But, you know, that's how everybody does it. So that's a model that is sustainable, that will work. And it's been phenomenal for him. And now he's opening up the doors to get very aggressive to see how fast he can work and grow. And we think he may double this year. So he may go from 6 to 12 million. And our model is the best model for that, for growth. And it's going to be a good deal for him. And, you know, we know we're going to make him very successful.
Fantastic. Thanks, Andrew. Great stories. And I really appreciate that, because I know all of us are involved in assisting small businesses, and you all are involved in small business lending for that passion and seeing that entrepreneur achieve their dreams, succeed, help their family and everything like that. So we have a couple of great questions in the chat, and I'm just going to throw these out to anybody. The first one is from Brian, and it's about kind of some of the stuff we talked about with interest rates and inflation. And so as they rise and inflation is present, will there be additional restrictions or new restrictions in lendings? If so, when, and if not, why not? So just, you know, anyone feel free to jump in on that one.
You know, from a traditional bank point, there wouldn't be restrictions in lending. What you're going to run up against is if you do a loan at, say, 100,000 at 3% interest, the payment's going to be a lot less than a loan at 100,000 at 6% interest. So it might be a little bit more difficult to qualify because the payment's going to be higher. You're going to need to be able to show that you can support the payment. and the business can support the payment.
No, I think that's perfect. And I think that applies to most everybody in what you're having to look at. Another good question here was from Atalanta, kind of sounds like she's a florist, but it was a good question there about, can you, and this might be for Miriam, because I know this is your wheelhouse, can you get an SBA 504 commercial loan for real estate if you already have an idle loan?
Yes, you can. So you can have 3 or 4 SBA loans of all different types. I mean, you can have an SBA loan, you can have an idle loan, you can have a 504 loan. You just have to cash flow for it, which means you just have to show that you have the ability to make that monthly payment. And it depends on the lender as well. So some lenders have certain stipulations about that. So whoever you're thinking of getting that 504 lending with, which by the way, we do as well, the first step is usually to talk to your bank. And then they join forces with us. But either way, I know we're both happy to help.
And from a traditional bank point of view, we would do it, but we want to be in first position. So we would ask the EIDL SBA to subordinate to go into second position behind any other liens out there.
And what that means, what that means for people that don't know is just basically that if your loan were to default, whoever's in first position, so if it's Janelle at Chase, and let's say we're second, then Janelle gets her money first or Chase does. Yeah.
I would add to it and just emphasize, because we have such a good group here, as an example, another client that we are going to be signing next week came from a nonprofit lender that had given them $100,000, and within a year of that, they grew to 2.4 million. So they outgrew the initial SBA product loan that they got. That lender brought them to us. We're going to be signing them, and if everything goes right, we're going to get them to 5 million this year. So we're going to help them double. So that lender has a lien, as Miriam was saying, and they're going to subordinate that lien to us so we can give them the additional funds. And we have a lot of clients that have those idle loans. And I know the banks definitely need to be in front of the idle loans, but as of right now, most of the clients that we are funding, we are staying in second position behind the idle loans. We're asking for subordination, but there's so much demand that the SBA is running behind and doing it. We're not going to hold up the loans to get those done. So we are funding clients in second position, a rarity in the marketplace.
So what I think is, that was a great question, because there's a lot going on in the marketplace with idle loans, with PPP loans that have gotten forgiven, as Andrew's talked about, and all of that. And so make sure, I think one of the best things is all of the, the advice or everything like this is making sure that you're prepared. As you go and talk to a lender, that's what we're here at SBDC to do. We're not a lender, so we don't have any conflicts of interest. That's all no cost service. We have some ex-lenders, excellent finance people to basically help you get organized and really be able to have all of that information together. And we really do, it's truly a collaboration between us, the lenders, and you, and the Small Business Administration and everybody to make sure you're able to succeed. So I wanted to kind of wind down with kind of some closing thoughts. I'd like to let you each kids kind of go away with one final tip and reintroduce yourselves, and appreciate everybody for being here. Again, we do this on a regular basis each month. And again, we thank our sponsors, CDC Small Business Finance, Primary Funding, LendSpark, Marble Bridge Funding, United Midwest Savings, Pacific Premier, and Banner Bank, and really appreciate everybody. So I'm going to kind of go around the horn. One last tip you have, and reintroduce yourself, and we'll wind down into our weekend. So why don't we start with you, Janelle?
Yes, I would say, having heard from all the panelists on the board, with experience, everyone here cares about our clients, making sure you get the loan. My tip would be, talk to your banker, and if you don't feel that you're getting the kind of treatment or enthusiasm or passion that you feel that you deserve for your business, find another banker. You need to make sure that you have a great relationship with your banker. So I think that's one of the most important things.
Fantastic. Joyce.
My tip, I think it goes every time. Make sure you have the right accountant for your business, okay? And make sure you share your plans and your dreams and your passions for the next 2 or 3 years, so they'll get you ready there. I think they can really help you out getting to the next level. And make sure you have all your information. Make sure you know your numbers at all times. That's my biggest thing. So make sure, you have the right accountant, because every time you're going to go to eat any of us, we're going to be asking you for your balance sheet, your profit and balance. So make sure you have that information at hand.
Fantastic. And Miriam?
I would say treat your credit like gold. If you're considering doing a bankruptcy, reconsider, through the pandemic, I think it really hurt at that point. But, because of what was going on, maybe that can be a lesson for us. Even people like us, an alternative lender, a nonprofit lender, really tightened up our credit score guidelines. So just take care of your credit, even if you apply for different credit cards, like that hits your credit. I know that Accessity and there's other places that offer, I know you guys do at SBDC as well, offer help with understanding your credit and, how to fix your credit. But other than that, I would just say, try to make your payments on time. We all know stuff happens sometimes, and that's okay. That's explainable to a lender, but don't, forget to make a payment just because you forgot to set up auto pay or something of that sort. So, take care of your credit. It really, really will help you, not just to get a good interest rate, but just even in the midst of a crisis to get a loan to save your business. So yeah, take care of your credit and understand it.
Fantastic. And Pete?
I think honestly, what everyone's kind of saying here is just don't do business alone. Honestly, you shouldn't have to just go make decisions on a whim. You should have partners, whether it's your banker, your accountants, whoever you're talking to, do your due diligence. Understand where you're going as a business and get the right people around you that can help facilitate that and be able to partner with you to ensure that you're successful, that you have all the capital that you need to be able to cash flow and stay solvent with your business. So that would be my biggest thing, is just don't do business alone. If you don't have a relationship right now with a bank or a lender or an accountant, go get one. It's worth your money. It's going to save you a lot of money too. So that's what I'm saying.
Fantastic. And Mr. Andrew?
I would say the most important tip is to work with your local SBDC on every category. They have, throughout the state of California, hundreds and hundreds of consultants that are experts in all sorts of fields. So it isn't just finance, though they have that, marketing, dealing and selling the government. It goes on and on and on. This is all free. I don't understand why any small business wouldn't pick up the phone and try to hook up with several of the different consultants that are available to help them get on their way. I had a new consultant I met in an area in my backyard, and I'll be sending 3 or 4 of my clients to this guy. He's a true expert in his field. He's new to me. I haven't met him before, but after I discovered what he did, I thought of 3 or 4 clients right off the bat that I can get over there that can use his help to expand their business probably quite rapidly. So SBDC is just the best resource you could ever have.
Fantastic. And so, again, we're here to help. We appreciate everybody, but we're super excited to always have these panels each and every month and be able to kind of let you meet different lenders. And I think the main advice I'm actually going to end with is like they said, is work with people. I think Pete said it well. Make sure you have a partner. We're here to assist you. We don't have any obligation. There's also so many great lenders out there that truly have the passion. And like Janelle said, if you don't feel it from them, then it's wrong. Go with your gut, because there's so many great and passionate people out there that are here to assist you with your small business and to go with your gut and understand that as well. So we truly appreciate it. We thank you again for Pete, for Joyce, for Janelle, for Miriam, for Andrew. Appreciate you being on here. Luci, who was able to kick us off and kind of give us some updates. You all have a fantastic weekend.
Thank you, Danny.
Thank you.
Thank you.
Thanks.